Hi everyone. So in my last video, I did explain the debits and the credits and the golden rules of accounting, right? Today what we're going to do is we will learn to how actually use them to record any transaction. And this process to record any transaction is what we call a journal entry. So first we'll try and understand that actually what a journal entry is, right? So journal is nothing but the book of original entry. It is the book where all the transactions are recorded first hand. That is, it is the book where every transaction is recorded for the first time. It is the first place where we record any transaction, right? So, journal is the book where we record the transaction for the first time. Journal is followed by ledger and then the trial balance. Okay, we will in our next videos we'll learn about ledgers and the trial balance as well, but today it is going to be about journal. So now we will first try and talk about the format of a journal. It is very important for us to understand that every journal entry has to be passed in a specific format. Okay, there is a specific format in which the journal entry will be recorded. I'll show you the format of the journal entry. So this is the format of my journal entry, right? When you are doing accounting for Indian curriculum, then we use this LF column. Journal is the head. Date, you record the date because transactions are recorded chronologically, date wise. Particulars will not do nothing but mention which account are you debiting and which are you crediting. LF actually measures and records the counterfeiting ledger numbers, which we are doing for Indian curriculum. If you will follow US curriculum, then we don't need any LF column because they follow journal ledger. Okay. Then the debit and the credit. Debit column will have the amount of debit, credit will have the amount of credit. Journal entry is based on the double entry concept of accounting. That means every entry in debit will have a simultaneous credit as well, right? So the debit amount and the credit amount are always matching. Okay, good. So in this transaction, when we are recording journal entry, first account head will mark the debits and then the second account head will mark the credit. Again, the same thing. If we are using Indian curriculum, we mention 2 for every entry that is recorded as credit. Okay, every account that is to be credited will have a prefix 2. But in US accounting, we just mention the account heads and debits amount in debit column, credits amount in credit column. We do not need to specifically mention, right? So to prepare journal entries, we will have to use the golden rules of accounting that we did like very last class. So these golden rules depend on what account we are dealing with. Personal account, real account and nominal account. So based on the account head, account type, we will apply the golden rule and we will try and get our journal entry, right? So first thing will be, if you are recording journal entry, so the first thing that you have to do is you have to identify the account. Whenever I'm telling you a transaction, whenever you see a transaction, first thing that you have to think through is, okay, what are the accounts that are getting impacted? We are identifying the accounts that are getting impacted. Second step will be classifying the account. That is, whether we are dealing with a personal account or we are dealing with a real account or we are dealing with a nominal account. So the first two steps, first we will identify the account, then we will classify the account. Then third step will be for us to apply the rules, the golden rules that we have taught in that we have studied in the last class. हम उस rule को apply करेंगे, and the last step will be to pass the journal entry. I have taken certain different situations and for which I have passed the journal entries. These are the same examples that I took in the last video, so I'm gonna carry on with them only. First entry is the same, that we started business with cash with XYZ amount. Okay, so as I explained in the last video, that when cash is coming, cash is roll account, so it has to be debited. So cash is debited because the investor falls under personal account, so his account will be credited. Here I will making the demarcation. This is Indian curriculum followed journal entry, where we are mentioning two before the credit amount. Okay, if we are using US accounting, then just mention cash account, capital account amount will be credit column, cash account will be in the debit column. Okay, then second entry, furniture account debit to cash. This was used when we are buying furniture for cash. When we are buying furniture, the two accounts involved will be furniture and cash, right? Furniture is roll account, cash is also roll account. Furniture is coming in, so we are debiting, cash is going out, so we are crediting. So the correct entry will be furniture debit, cash credit. Third, paid rent. If we are paying rent, rent is an expense, right? So it falls under the nominal head. And because it is nominal account, the rule is every expense has to be debited. So rent will be debited. We are paying cash. Cash is going out. Cash is roll account. Debit what comes in, credit what goes out. Cash is going out. So it will be credited. So this is the way we do prepare the journal entry. I'm again reiterating same fact. To prepare journal entry, we have to make sure that we have understood the golden rules of accounting, the accounting concept. Now to prepare journal entry, first thing you doing, first is classifying the account, right? Identifying the account, then classify them. And then based on the classification, choose the golden rule and then pass the journal entry. Journal entry format is important because we do not pass journal entry without formats. Format will be needed. So please follow the format. And I hope you like the video and this made journal easy for you. We'll meet tomorrow with next topic. Thank you everyone. Good day.